All right. Welcome to today's I call it meeting or this video. Here, what we are gonna do, we would be reviewing the markets for this new week. However, before we start, we would actually look into the market review for last week, and that was the review from 5th February to 10th February. Just a little bit of recap. Now, today's video will be a little bit lengthy than the previous one because we will not just talk about the review. I'm going to teach you one pattern that you can use to trade the financial market. So please stay with me to the end so you can actually learn all that there is. All right. If you're new to this YouTube channel, please do well to like, subscribe to this channel, and ensure you turn on the notification bell so that new uploads you'll be the first to be notified when we upload um, new videos. All right. So all we basically do in this channel, we talk about trading profitably, risk management, how, and all of those stuff. So a little bit of recap. A little bit of recap. This is GBP USD. In the last week's review, if you've not watched the video, you can actually check the channel. You will see all of those stuff. We explained clearly, looking at GBP USD, how that we expect the market to drop or to fall off to this point. All right, and this remains the target objective for GBP USD. So we expect price to drop down towards the this liquidity point right there, and probably expand. Once that happens, then we are looking at this fair value gap right on at the bottom as a next point of objective. However, we stated last week that because price is bearish, and this is very important to take note of as a trader. All right. What is it? For the fact is, no, if price is bullish or bearish, we understand that the market moves in waves, right? So because it is bearish in momentum does not mean to just start falling off the cliff. It has to do certain stuff to induce traders. All right. So last week we spotted this black or down close candle right here. This down close candle, by the way, these are all ICT concepts. All right. So I'm in no way claiming authorship. Um, of course, if you listen to that video, I did mention my mentor, and you can actually check him out. A great personality and all of those. We always give credit, but we are grateful for the gift of ICT. All right. So according to ICT, this is a bullish order block, this down close candle. So we expected this to serve like a resistance to price. All right. And so we stated last week that we expected price to react off this order block and so to be straightforward bullishness. And yours truly, we'll go to the 1 hour chart. We saw our price reacted and moved up. In fact, we did not just tell you about this reaction, we also pointed how far it will react back before the bearish trend continues. So if you have not watched that video, please go ahead and study. It's just about 12 minutes long. You would learn something there. Now today I'm not just going to do review, I'm also going to talk about a strategy with which you can use to trade the financial market very easily. All right, so I'm going to head over to the 1 minute chart and yep, and look at it together. All right, this is the one, I say 1 minute, 1 hour chart, please. Okay, so that boxed area is what we see from the daily chart right there, and I'm going to explain that just in 1 minute because we did talk about this area last week. By the way, this is, according to ICT, this is a breaker. You have a low, a high, a lower low, right? And during the course of this channel, we're going to be explaining some of these concepts so that they will be you understand how this works. All right, we're not selling mentorship. You just need to be here for free and learn some of this concept. Now, this last series of down close candles, we're not explaining that today. We identified that last week as a point where we want to see price get to before the reaction. And can you see the how perfect this was? You know, you cannot actually fake it. Again, if you feel you want to see how we talk about that early ahead of time, please refer again to the video training of last week. So we're going to look at that. So as at Friday, this was what we had on Friday. So when I uploaded the video, we had all of this space, and then that box was outlined. All right. So this was Monday, typical Monday. And if there's anything I'm going to tell you right now, you want to be conscious of how you trade Mondays. Not because it is wrong, but usually you're going to have lots of trap moves for Mondays, right? So Monday price came down, right? And I wasn't going to fall for this sell because this is going to be my point of interest. So as a trader, you must have what we call point of interest. You must have a point, you must have like a mini bias where you expect price to get to before it does what you want it to do. All right, please, just the way I can talk about that. So we already wanted price to get there. So from Monday, Tuesday, I was all bullish, expecting this movement. But you can see clearly Monday and Tuesday we had lots of manipulation. Look at what I'm talking about. Monday we had all of these, all right, and then Tuesday it came lower, taking out Monday's low right there, and then there was a news release on Tuesday. We had this firework to start up the up movement right there. I think was it there was a major news, I cannot recall that right now. You can check that out on your my forex factory. And by the way, you want to always know about the major news release from your economic calendar using my forex book or other ones that can really help you. So by Tuesday we had price drop. Now what do you think they were doing Monday, Tuesday? They were inducing shorts. That means they were inducing traders to go short, and this is typical of the forex market. And look at Monday's high, that area, the high of Monday. All right, extend it in time. What will you see on Tuesday? That move was deliberate to take out all the sellers of Monday. All right, all the way up there. It returned back, punished some traders, and by Wednesday we had this movement. By the way, I got in right here on Wednesday, and I'm going to teach you on how to do that very simple strategy. Right, there are about 4 of them we're going to learn during the course of this season, but I'm going to learn one today, and you can apply that as your trade model. So we had price do all of this, which we are going to look at very quickly when we start after analyzing for next week. I will teach you about for this week rather, then I will show you that simple strategy. So please stay with me till the end. So we had this push on Tuesday, indicating the up trend direction. Then on Wednesday we had similar stuff like what we had on Tuesday. We'll look at that quickly. And then Thursday it was over 150 pips straight run, move right to that level we already outlined. Now we can be more precise than just having a zone marked out, right? It's not really about a zone. Okay, you can see how the body of this candle, okay, not the wick, look at the body where my red line is, how this one respected or reacted right there. All right, I didn't take this trade, obviously. I was in all this movement, took profits out. There's some of our students in our signal room and all of those stuff, they got in on this, right? Not advertising anything, but if you had followed or watched through, you would have been able to get in. For the sale, of course, we didn't take this on Thursday. Friday was beautiful Friday trade. We would look at this when we explain the strategy you can apply. All right, so that's about the recap. For projecting forward, nothing really has changed. In fact, there is a lot of pips. I'm conscious of using the word money, so there are a lot of pips to be made or there about this new week. So the objective still remains in that your dollar, we normally start our analysis from looking at the dollar indices, the dollar or DXY according to your broker. All right, so the trend for dollar hasn't changed. Don't mind all of these stuff. Okay, so I'm just going to make this short and quick. So obviously we saw dollar rallied last week, and this consolidation we saw, it was all what happened Monday, Tuesday, Wednesday in GBP, and then this up movement on Thursday, Friday was what we had as the corresponding downtrend in GBP USD. So for this week, we expect dollar to keep rallying high, right? We expect the rally. That means we expect bullish run for dollar, and I am conscious of this level right here. The midpoint of this up close candle or green candle, that is the mean threshold of the bearish order block. So we expect dollar to pull to that area, and if it breaks that level, this main threshold, which I actually expect it to, and I will show you why, but if it does break that, then obviously we are coming to this high, and we could see some bullish run all the way up to that fair value gap. All right, so if you're new here, we're going to have or create time to talk about these stuffs individually. All right, so this is the projection. Dollar, want to see it break this, and if that happens, then we're coming here, and eventually we'll attack these areas, and then over the long run dollar is bullish, and that's good news. Sorry, is it good news now? Yeah, it is a good news for if you're planning to short GBP USD. The same thing, the opposite of it will be correct for GBP USD. We expect it now to break this area, take out this level, and eventually come to this fair value gap we have outlined. So like I said, the objective remains the same. So I'm going to take out this area and then transpose this to the hourly chart to show you what that is. So we'll now move to the strategy you may want to start looking at. So we have utilized all of these areas completely. Where we are at currently is looking at the direction of the market. All right, so obviously I think the we have our levels low. Look at Tuesday's low, which is, I'm going to extend it in time. That is a very nice point to take profits in the market, or take your partials, right? Now, because it is going to be bearish, does not mean price will automatically just start falling off, and that is something you want to be conscious of. However, there are times that could be the case, right? There are times you could have that as the case, but I want you to be conscious of these levels I want to mark. Now this line here is that daily sell side liquidity I already outlined in the daily chart. Why this one is 2. So these are very good point to take profits off the market, and depending on when you're going to enter this trade. Oops, I thought I was going to get something. Okay, so I'm going to show you how to get into the trade. That's about 118 pips. That's about 240 some pips, right? And then we still have some levels to run down to over 300 pips. So the move I expect this week is huge and massive for GBP USD, straightforward. However, I want you to take note of the fact that and that's what you're going to learn very quickly after this review, that the fact that we are bearish does not mean prices just start falling off. It could happen, but I'm expecting, and you should always expect, what we known as the AMD, all right, the accumulation, the manipulation, and the distribution. ICT calls that the power of 3: accumulation, manipulation, and distribution. So take for example this typical Friday, price opened up right there, did a little bit of accumulation, all right, and then it went up to manipulate. All right, what was this? ICT calls it the Judas swing. It went up to actually induce traders to go long, so that is a manipulation, and then it's still a little bit of accumulation, then we have the distribution. All right, so you're going to see that all along the price chart. Accumulation, there was some form of manipulation, right? On this day there was really no distribution, as it were, right? But it got distributed the following day. Of course, the coming of price, when price tried to come down, that is manipulation, trying to induce traders to short, and it got into the distribution phase. All right, accumulation, manipulation, distribution. AMD: accumulation, manipulation, distribution. always expect that. So we're going to have that talk about some other time more extensively. So currently this is at the time of recording we have like a manipulation. So I'm going to always expect a manipulation where price goes against the real trend. So I'm going to head over to 15 minutes chart, but before we do that, I want you to especially take note of this area, that area. Now I could actually take it out from all of these areas. So let's be more precise. So let's mark out the two fair value gaps. You can see there. So you want to just mark these areas out. So I'm going to just put a box right there, and notice how I'm doing it. Right, from the low of this candle to the high of this candle, there, that is a gap. That is what we call the ICT fair value gap. Right there. And this one also have the next candle, I think, has the same, although very small. You want to, so I'm going to use a trend line to mark the other one so the chart will not be too messy. Right, that low, and the other candles high. Now this is what you want to, if you are a student already of our in-house trading team, you may want to actually, you already know how this is done, right? And very simple. You can see where I'm outlined that area, that little bit of gap right there, and then we have another one up there. This green candle right there is what referred to as ICT bearish order block. So that's also a very important level, just like we saw also in the daily chart. All right, so these areas I just marked, the implication is that we expect price to manipulate traders to go long into any of these areas. We'll go to the smaller time frame, and once price gets to any of those areas, it will not give you a reason to sell, which I'm going to teach how to enter the trade, source trades now. So let's head over to 15 minutes and just wrap this up very quickly with the strategy. So what I just did, great. So what we just did was to move from the 1 hour to 15 minutes and then have those levels we marked out transposed here. So you can see that's the first gap. This is the other gap. So we expect price to be bearish as we have seen overall this week, but it must induce traders to the opposite direction before that movement occurs. So mark out these levels in your chart, right? Some of you would not, but the truth of the matter is that it's only those that do stuffs like this find the greatest comfort, right? And you'll be amazed how this turns out eventually. So take note of those areas, price running to these areas too as a manipulation phase, and then it should distribute lower going forward. So we can actually have these happened anyway. All right, and for if you're a new trader, I would suggest you wait till you see price run into any of those areas before you start selling. Okay, so let's head over to my white screen and very quickly explain that. But I think before I would do that, I would just, for visual aid, right, for your visual aid, this is your, or should be your, projection. Simple, clear enough. So how do you join in a trade? Very simple. There's a simple strategy you're going to learn. I call it is a special strategy for me. And for example, if you see days that has one directional movement like this, right, or even this one, but I want to see clean movement like this, you should always expect price to retrace back into the range. So how do you join in trades like that? I'm going to talk more about this first train of thought in my next video. So please do well to subscribe to this channel if you have stayed to this point, and more importantly, turn on the notification bell so that you'll be the first to be notified once we do upload that next, because this is a very important strategy to me. So on how to enter trade very quickly using what we have been learning, I will head over to a whiteboard and just give you the picture of it. All right, so let me draw that. Now what you want to see, for example, we have identified that area where price should get to before it's reversible. But because price gets to an area does not mean you should start buying or selling. You want to get what you know as a trader as confirmation. You want to have a confirmatory entry to price, all right, before you buy or before you sell. And so what you want to do, all right, is in your 15 minutes chart or time frame, because we are looking at sell, let's start with that. You want to see price get to that area, all right, and once price get to that area, you want to see a rejection of price. Now there's what we call the timing elements to trade. Again, all thanks to ICT. Of course, the timing element to trade is so important. Is what we call the London session strike zone. That means that first 3-4 hours of London open. So if you're a Nigerian, that will be around 8 o'clock to about 11 o'clock GMT plus 1. That is London session strike zone. And then for US session, that's around 1 p.m. to about 4 p.m. US session. All these my times are in GMT plus 1. So wherever you are streaming from, you want to convert to your local time. So inside this time zone, so this setup I'm showing you must happen inside this time zone. How cool it is. I want you to think about this for a moment. How that you can actually determine when you want to trade. If the setup does not present itself in this time zone, do not bother to take the trade, because it's most likely going to be a trap. Okay, so inside either the London or the US session Q zone, the time must be settled, must be fixed with in your mind. You must wait for price to run into your areas. In this example, those areas are already asked you to mark out. Price should get to that any of those areas, and what you should be looking at for is a rejection of price, all right, and that rejection must lead to a break of market structure. So I'm going to mark out this area right there as a low. Okay, a low prior to price running into that area. So you want to see market reject from that area to break the structure and then return back to range. So your entry would be, not, you are not chasing price, that's wrong. Your entry would be price returning back to the structure, and most likely in this rejection move from that point of interest area, fair value gap or an order block, especially fair value gap, would be created. That's what makes an order block very valid according to ICT. You must have a fair value gap, which again, if you don't know what that is, we're going to teach about that, and I'm going to show you a final example to show how that applies. So your entry would be price returning back to that fair value gap inside this range. So you can start pulling your sell right there, and then you can put your stop loss just above the structure, and then you hold for price. You can take some partials here. Paying yourself or taking partials I learned from ICT is very important way to maximize your trade results. You're never wrong paying yourself. And notice those areas I showed you in the GBP USD chart, how you can actually take some partials or profits along the way. Very important. You can take some profit right there, or you can hold for the entire 300 plus pips move we have talked about. So plan your trades and trade your plan. Super important. One more time, you have that level we expect price to reverse from, which I have shown you a classic example. Learn from this immediate example. You don't have to think too much about it. Do not overthink it. Wait for price to get there, and then wait for that rejection that will eventually lead to a break of market structure. Once that happens, be ready to strike, but don't strike immediately. Wait for price to return back. All I've been saying, one word has been standing out: wait. Patience is a virtue in the business of trading. So wait for this retracement inside that range, most likely a fair value gap. That is where you should be selling, and then your stop loss goes there. This is a simple strategy. Why is this important? Price already giving you the directional movement from your point of interest, so everything must be done in its narrative and in its context. All right, so I'm going to show you a classic example of how this played out just this past week. So of course, this is GBP USD. This was Tuesday last week. How did we apply that? It happened several days, and I'm just going to take out Tuesday and I think the other day which did traded that. So let's go, let's go, let's go, let's go, let's go. All right. So this was that Tuesday? Yep, this was Tuesday, right? Uh, it's really okay. I think Thursday is more better when we had this. Yep, when we had that drop right there, because this is just directly what we just talked about. So that boxed area is the area we marked out in the daily where we expect price to drop off, or the 1 hour chart, what we call the breaker, ICT breaker. So we saw price rallied there, so you could have maybe waited for all of these things for price to get there. So what the fact price gets there does not mean you should be selling immediately, right? That's what we said. So you must now wait for price to reject off that. So I'm going to go to a smaller time frame. You can use your 5 minutes time frame to actually refine your entry. Okay, let's do this quickly. Let's do this. This video is getting too long. It's getting too long. It's getting too long. Okay, so this is the 5 minutes chart. We see price gets to our point of interest zone, all right, and then it rejected off that area, breaking that structure. It is something like this you are to look out for, breaking the structure right there with this candle. Now price does not necessarily have to break it with full body, you just have to spike through, right? That's how you know structure is broken. And then look at this return with this green candle all the way up to this green candle here is an order block, ICT order block. So we said your entry is at the extreme order block or fair value gap. So when this price candle returned back there to this candle, actually the midpoint of that candle, which is the mean threshold, you are already selling and your stop loss goes there and you could have been in profit. Now if you didn't get in on this entry, look at this low right here. Let me bring that. Okay, let me get another one. Look at that low. Okay, so if you want a more confirmed entry, depending on your definition of confirmed entry, we see price broke it right there. Inside all of this range, we have this as a fair value gap. From this, all of this green black candle right here, there is what we call the fair value gap. That means the candle before it and the candle after it did not overlap with any wick, right? So that's a fair value gap. I'm going to send a teaching on that shortly. All right, so you wait for price to return back inside that range. That is where you should be selling right there. And because this is a fair value gap, that's and that fair value gap there, your stop loss must cater for both of them. So your stop loss can still be at the top to be safe. And in this case, it didn't bother to go up there, right? By the way, this happened in the afternoon by US session Nigerian time around 2 p.m. That session I told you about. These things must happen in the time of the day, and then obviously we had over 100 pips move. All right, and this is sort of the manipulation I told you about: accumulation, manipulation, and distribution. All right, we're going to talk about this with another strategy shortly when we discuss fair value gap and strategy number 2. So this is how far we can go on this video, and I want you to pay attention to what we just talked about, especially the model we talked about. I want you to specially study how that plays out for this week. If price gets to this area or that area, you don't just start selling, you wait for that rejection that breaks a market structure, then it return back to that area. That is where you should sell. And so I want you to implement, if you watch this early enough, implement this in your trade, and please comment below how that goes for you. I have about 4 strategies I'm going to review during the course of time. So also again, one more time, do where to subscribe and like, and please comment your favorite pair probably you want us to look into in our midweek or intra-week review, analysis, and all of those stuff. So thank you so much for subscribing and watching, and stay profitable. Have a blessed week.